Imagine this. In 2016, someone bought a Hermès Birkin for $10,000. Instead of using it every day, they stored it carefully, treated it like an asset. Fast forward to 2026, that same Birkin could easily sell for $20,000, $30,000, sometimes even more. Now, compare that to tech stocks. Some people invested thousands into high-growth tech companies, only to watch their portfolio drop 40%, 50%, even 70% during market crashes. So here's the question nobody talks about. Could a handbag actually be a better investment than tech stocks? Today we are breaking down the real return of Hermès Birkins, why tech stocks are so volatile, the psychology of luxury asset investing, the risks nobody tells you about, and which investment actually wins in 2026. Let's get into it. Let's start with something important. Hermès never intended the Birkin to be an investment. The bag was originally designed in 1984 after a chance meeting between actress Jane Birkin and Hermès executive on a flight. The result? A handcrafted leather bag, made entirely by one artisan at a time. But something unusual happened. Over the decades, the Birkin became a status symbol, a collector's item, and eventually a financial asset. Luxury auction houses started tracking resale prices. Collectors started buying rare pieces, and suddenly people realized something shocking. Certain Birkins are outperforming traditional investments. Why? Because the supply is extremely controlled. Hermès does not mass-produce Birkin bags. You can just walk into a boutique and buy one. Even wealthy clients wait months or years. Scarcity is the key to everything. Let's talk numbers. Over the past 2 decades, Birkin bags have shown average annual returns, estimated between 10 to 14%, depending on the model. That puts them in the same conversation as traditional financial assets. But not all Birkins perform the same. The ones that appreciate the most usually has 3 characteristics. 1. Rare materials. Exotic skins like crocodile, alligator, ostrich. These pieces can sell for 3 to 5 times retail price. 2. Limited colors. Hermès releases seasonal colors that may never return. Collectors chase them aggressively. Examples include rose sakura, white cypress, blue electric. When production stops, resale prices often surge. 3. Hardware combinations. Gold hardware, palladium hardware, brushed finishes. These tiny details matter a lot to collectors. The rarer the combination, the higher the resale value. And then there are the holy grails. Birkins that sell for 6 figures at auction. Some even cross the $300,000 mark. That's not a handbag anymore. That's a luxury collectible asset. Now let's switch gears. Tech stocks have created some of the biggest fortunes in modern history. Early investors in major tech companies became multi-millionaires. But tech investing comes with a major downside. Extreme volatility. Technology companies move fast. What dominates today can disappear tomorrow. Think about the cycle. A new innovation appears. Investors ration. Prices skyrocket. Expectations get unrealistic. Then the market corrects. And when corrections happen, they can be brutal. Some tech companies lose half their value in months. Even the biggest names can experience sharp swings. In the past decade alone, we've seen massive growth phases, major tech sell-offs, and sudden rebounds for investors with strong nerves. Volatility creates opportunity, but for many people, it creates stress and panic selling. Luxury assets operate under a completely different economic system. Instead of being tied to quarterly earnings or market speculation, they are driven by culture and desire. Let's break that down. When financial markets panic, investors sell stocks immediately. But Birkin owners don't behave the same way. Most collectors are wealthy individuals who don't need quick liquidity. They hold their pieces for years. That creates price stability. Also, demand for luxury goods tends to remain strong among high net worth individuals, even during economic downturns. In fact, sometimes luxury becomes more desirable during uncertain times. Why? Because physical assets feel safer than digital wealth. That's why some investors treat luxury bags like art, watches, rare cars. They are part fashion, part financial instrument. Now, let's talk about the part many influencers skip. Luxury investing is not risk-free. Here are the biggest risks. Authentication risks. The luxury counterfeit market has become incredibly sophisticated. A fake bag can cost thousands and look nearly identical. If you don't buy from trusted sources, you could lose everything. Liquidity risk. Selling a Birkin is not instant. Online stocks that sell in seconds. Luxury assets take time. You may need resale platforms, auction houses, private collectors. Sometimes it can take months to find the right buyer. Storage and condition. Condition is everything. Scratches, stains, or poor storage can reduce value dramatically. Collectors store bags in climate control closets. Protective dust bags, structured insets. If you treat it like a normal handbag, it probably won't perform as an investment. Tech stocks have their own risks too, and they are often underestimated. Overvaluation. During tech booms, investors price companies based on future expectations, not current profits. If growth slows, stock prices can collapse. Innovation risk. The tech world changes incredibly fast. A company that dominates today could be disputed tomorrow. Entire industries can shift overnight. Emotional investing. Many people buy tech stocks during hype cycles. They buy high and sell during crashes. That's how retail investors lose money. So, which investment actually wins? Hermès Birkins or tech stocks? The answer might surprise you. They serve completely different roles. Tech stocks are designed for aggressive growth, innovation exposure, long-term wealth building, but they require emotional discipline. Meanwhile, Birkin bags behave more like alternative assets. They offer scarcity, cultural value, slow but steady appreciation. Think of them like luxury collectibles. The smartest investors don't choose one or the other. They diversify. Stocks for growth, luxury assets for stability and lifestyle. Because at the end of the day, a Birkin can do something tech stocks never will. You can actually wear it. So here's my question for you. If you had $20,000 to invest today, would you put it into tech stocks or a Hermès Birkin bag? Let me know in the comments. And if you love luxury, investing, and smart fashion strategy, make sure you subscribe because the next video is about designer bags that are secretly losing value in 2026. And trust me, some of the names on that list will shock you. Bye 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 bye!